Hello, everyone. How is everyone doing today? Row in first. Good morning, Row. Good morning, Sterling. Good morning, Jacob. Watched Dune 2 last night. By the way, good morning, Richard first. Watched Dune, thought of Mike. Now, how is Dune 2? I really like the first one. I'm talking the first one of this part, not the older one. Wasn't as action packed, but I heard the second one's good. Tell me how if the second one is good from your opinion, Richard, because it's on my to-do list. Although it's probably on my to-do list after it starts getting to 100 degrees consistently here. Because then, you know what, especially in the afternoon around 4 or 5 p.m., it is a little warm to be outside in direct sun, so maybe I'll put on Dune 2, but the rest of the day, if I'm not in front of the computer, I'm going to be outside. So, good morning, Jake. Good morning, John. Good morning, McRangers. Trump's accepting crypto donations. Tesla, yeah, I saw that. Tesla sales fall to European low. It ran up close to that 62.5 yesterday. Again, they're celebrating 50 more. Oh, God. Everything's still insane. You know what? When we get meme stocks and Tesla to actually start trading normally, then we'll be at way closer to market bottoms. Hello, Charles. So we have a long way to go. Yeah, Target, they missed on. Oh boy, they. All right, I can't speak. Let's just call it a day. TGT. They are a pretty big gap down. They missed on earnings. They beat on revenue, but revenue was down substantially. So remember, Walmart beat, but so is the consumer even shifting from Target, which is sort of the higher low end, to Walmart, which is the low end? There's a Walmart I go to around here. Where I used to live. There was not an easy Walmart to get to. Here there is, and I mean it's not a lot of foot traffic, but it's still fairly busy. But Target's definitely on the reduced foot traffic side here. Also, just from a macro, I track a lot of things. Another thing I do, I think I mentioned this before. Even if I don't go there to eat, I sign up for a lot of these like food apps and everything so I can see what deals are popping up. Because there were deals early pandemic stuff, people when it wasn't full lockdown, people trying to get people back into, all right, come and we'll give you a good deal on some food. Then all the deals went away. Now, within the last month, it's constant. I'll say most. I'd say it's over 80% have constant deals. I'm getting bombarded with deals like Panera. It's just an example. Panera, $2 off a sandwich, $2 off a salad, $2 off this. Buy something over $5, get half a sandwich for $5. Buy any full sandwich and get another something for $5. It's like constant. That's just one example. So when I start seeing that, and I go in there, and lunch, because I am on that beverage thing where I'll go get my iced tea, because I pay a flat fee per month. I think I paid for the whole year, which was $110, and I get pretty much unlimited iced teas, which is what I love. So when I'm out, I can just grab an iced tea. But when I go in there, anytime except for the peak lunch, the foot traffic's way down. So things are starting to tap out more and more. And so there's little things that you can watch that you don't necessarily have to watch the markets. And I'm doing the same thing with real estate. And boy, there are some not smart people. And I'm like, again, watching houses that are for rent that are just sitting there, and you'll ask the people, and it's like, well, you haven't lowered your price in going on 6 months and your house is unoccupied. They're like, don't worry, I bought it in cash. I'm like, well, you could have that either in the market or if you didn't want any risk in T-bills and you're going to turn over 5%. So in 6 months, putting what you paid for this house in cash, you've just lost 5% return on that money. And people, I know where it'll rent. Well, why are you flushing money? It's when we're at that level of everybody thinks they're a landlord and everybody thinks they're a smart landlord, and most of them aren't smart landlords. It's all right. So that's what I'm seeing around here. I can't speak to the rest of the stuff, but I'm seeing around here, and I'm seeing people leaving their house, up 280 days without a price reduction. Oh, it'll sell. The price will bounce back. Unless you have something really special about your house, that's what I'm seeing. Houses, if they're still going contingent, there has to be some very special or unique feature. Or they have to be priced really well. And I'll do it. I promise I'll do a separate housing live stream. But there's some stuff that is like people who did not buy since 2020 when we had the massive price spikes, who still have equity because they maybe bought 2016, 2017, they're getting competitive. They're like, well, I'll cash out something. I got to move. If they have to move, I'll cash out something. So they're drastically lowering the price per square foot because they have enough built in. But the people who have bought since like 2020, 2021, if they lower the price at all, they're underwater. So they're like, oh, somebody's going to come in and buy my house. Nah. Well, the comps are coming down. The comps are starting to come down. Now, they may not come down as much as I expect them to just yet. But once we start getting layoffs, once we start getting, we're still running inflation, it's going to get interesting. Buckle up. Buckle up, everyone. Let's see who's here. Good morning, Heinrich. Oh, great. We have rising nuclear tensions. Starts out boring and gets better. Thank you. Yeah, it's on Max. I have my Max subscription. Thank you. So that's where I'll watch it. What else? Good morning, Options 22. Good morning, Anissa. Let's see. I had a Panera breakfast sandwich a couple days ago, and it tasted, and made me depressed. Oh, boy. McRangers. Hey, let's see. Looking forward to the real estate stream. I've been watching the same thing as you in my neighborhood. Good morning, everyone. Good morning, Legion Reaver. Good morning, Royal Palms. I'm seeing similar anecdotal examples too. And please share. I really want to share in the chat. If, you know what? Hopefully I'll get to everything. But this is why we have a great group. And if you're seeing something completely different from me, chime in. It's not about being right. Remember, we analyze every aspect of the market. Just like we do with the charts. We don't just go and, even though in the short term, it's getting to rollover zone now, but we still do the bull case. We still do the bear case. It keeps you from getting tunnel vision and only looking at things in one way. So if you're seeing something else, say it. It's not about being right. It's about in the charts, trading these setups and making informed decisions. And overall in the macro, things can be different in different areas. I'm just trying to gather information. And I'll share it because if people are in the housing market or are looking to sell or trying to make life changes or something else, I'll share just what I'm seeing. Doesn't mean I'm correct. Just I'm going to share what I'm seeing. All right, today we got the existing home sales coming out in about 45 minutes. We got mortgage rates still over 7%. We got the crude numbers, crude dipping, but we got the EIA numbers coming out. We also had the wonderful, the East Coast reserves being gutted. That's going to end. Boy, all these short-term decisions are going to blow up one of these days. What's going to cause it to blow up? But again, we've gutted this strategic reserves. Now they're gutting the East Coast reserves, and they're trying to refill these strategic reserves slightly. But you know what? They're for strategic times. They're not for trying to lower gas going into summer driving season ahead of an election. But that's what, if people are that silly and fall for this, then that we get what we deserve. FOMC minutes, by the way, this afternoon. Bigger thing is NVIDIA. Tomorrow we got unemployment Thursday, and you got the S&P stuff. So it's really just pay attention to unemployment Thursday because that hits before the live stream hits. We got Tesla pulling back on their European miss. You can see Target down over 9.5% at this point. NVIDIA still up going into earnings. So we'll see. Can NVIDIA save the whole market in terms of groups? Fixed, yes. We no longer have dark mode. I forgot who shouted that out yesterday, but thank you. Thank you. Technology, slightly leading higher in consumer cyclical, but basic materials, comm services, consumer defensive leading the way down. Again, metals are starting to look tired so far. We'll get to those in a second. We're still just barely hanging on to that 50% level for September cut. Inflation numbers over this morning over in Europe weren't good either. Still in green mode. We already talked Target. I did not look at TJ Maxx. Big thing, remember NVIDIA after the close. That is going to be market moving. And then we have Snowflake. Oh boy. Tomorrow, not really much. There's really not much for the rest of the week in terms of earnings that's going to be market moving. All right. Let's see. What am I... Let's see. Where do I was option swing too, I have to say. I have a group that owns a bunch of Airbnb rentals and rental cars. They're definitely seeing a major slowdown the first time. Consumers slowing down for sure. Thank you for that feedback. Please keep me posted. Also, I'm seeing a lot of Airbnbs starting to hit around here, which is interesting because you have this is, still, well, and you can't just say it's summer because there are people who still rent these things out in summer, but groups, and I'm starting to see them for sale. If you look at who's owned them, they're not individual owners. They are like real estate groups and everything else, and they're starting to put more and more of them up. Actually, for halfway decent, at this point, halfway decent prices. Not long-term decent prices, but like... Now, personally, I would not be rushing in to buy an Airbnb because a lot of them have not been. I'm finding they're not being just looking at them because I've done a couple gut rehabs myself. I'm not I'm not a contractor, but I know what good work is, and I know how to because I've had to manage it before, and these things have not been maintained. Not been maintained, so you got to be real careful if you're going to buy one. But if you can find something and really do a good, proper inspection and get a good deal, it might be something to consider. Get on Discord and share your charts, folks. We're competing with some of the smartest people on earth. There's no secrets when it comes to the market. There are. And share what you know. Share what you're seeing. That's the point. Specifically East Coast. Thank you, Options 22. The delinquency rate in 2021 was just 4%. I mean, credit card defaults have more than doubled in just 3 years and have been rising the fastest pace. Yeah. Car defaults also. I think the markets would be more moved by one stock's earnings report than yes. I do think they're going to react more to NVIDIA. Send me an email, support at Pat Trading Partners, McRangers. Yeah, UK CPI was disappointing. Thank you for putting that in, Charles. Inflation numbers were good for Canada. I did not actually see that. Thank you for sharing. All right, TJ Maxx miss on EPS. Revenue was, wow, that is a miss. So we're getting an ascending triangle, but we're stair-stepping down in terms of momentum on the S&P. We're also getting to the topping area coming in this week. So even if we pop today because of NVIDIA or something, I'm still watching for the rollover play in here. Now, also, keep in mind, we are nowhere near in the futures taking the potential double top off the table. We're nowhere near. Not saying it's going to trigger, but you can see we're very overbought on the daily. Daily cycles are heading down, and we're trying to waning momentum, stair-stepping. I'm going to show something else with NASDAQ in 1 second. So would not be surprised. Don't know what the catalyst will be, whether it would possibly be NVDA, or I doubt it will be the meeting minutes. I mean, it's even the Fed officials are saying, you know what, if we're going to cut, it's probably going to come at the end of the year. But the markets are just shrugging off everything and still thinking September. By the way, any sell-off, the key support area is still right ahead of 5,300, and the rotation zone is just ahead of 5,300. So do keep that in mind. In the short term, my key support is 53.25 area, 53.26, and then 53.16. The only thing I'm watching for a breakout would be above 53.50. 53.50 is very key. That's that triple top on the short term. That's a 1 hour chart. And then if we did that, because this is where I'd use the little reverse harmonics, 53.55 roughly and 53.60, then 53.65 would be key target areas. Those would be areas I'd take action. Now I got that. What is it, a Def Leppard song? Action, not words. Stuck in my head. Now, I talked on, I don't know how many people tuned in to see me on Ninja, but remember I said these, especially the forward and reverse harmonics, I watch for to see how they get through. Now, this has been not a momentum market. It's stair-stepping higher on waning momentum, and you can see that with the RSI. All right. We got the 4 hour cycle starting to roll over. You got an ascending shallow wedge here. But you see how it just stair-stepped higher, reacted at that first harmonic, came back. We didn't see it blow through there. So this is where these are handy to take depending on your time frame. But if it blew through here, it would be a different story with the NASDAQ. Then it comes back down, 4 hour rotation zone, retesting the prior support area, rotating back up, stalling at the second harmonic. So, now, since we do have a pausing bar here on the 4 hour, and these are the shorter term ones, this is where now I'll shift to the forward harmonics. Now, I have 18,859, 18,894 to a major harmonic area of 18,908. So, let's say something came out, let's say we chopped around and something came out like the FOMC minutes and it was deemed dovish. And the market just rocketed through this 18,859 level, fine. But that just reinforces my key cluster area. So if it rockets through here, no action needed. It rocketed too fast, but that really reinforces the next cluster. If it stair steps higher and stalls out at 18,859, could be an area for me to take some action, which could be raising a stop. Especially with the rotation zone on the 4 hours getting narrower. That's just the little thing. I hope that helps some people. Now, this is the daily. You can see how it's a shallow wedge higher, but on any sell-off, key resistance right around 18.6. I mean, key support right around 18.6. You see rising rotation zone, and we got a couple very key support levels in here. So that would be on a first reaction down. That would be key. That would be very key. And from the longer term perspective, remember, we're getting into that toppy area on the NASDAQ. Doesn't mean we have to top it. I'm looking for the next few days for this top to start coming in. Dow. We'll call this the Dow drums. The Dow drums triggered the 4 hour and so far not doing much. But the probabilities are still for a pullback. 39,837, 39,778, 39,719. It just is stalled out right now. And remember, it's lower probability since especially since the daily rotation zone is right at that first target. So on any pullback, I'd really focus on this 39, 835 area, 840. What else? Well, metals, you don't have a high correlation with the market right now, but the metals are looking toppy. We'll look at those. Work part-time and at what is that, an infinity dealer service or an infinite dealer service? Seeing more and more customers not getting service done and getting estimates, and traffic in general is down a lot even before summer get ready work is done. I'm seeing the same thing. The consumer is stretched very thin. Great information. The consumer, and this is before a lot of layoffs happen. If we start getting in substantial layoffs, watch out. I think the consumer, and you can see credit card debt going up. That doesn't mean it has to instantly collapse, but these kind of things eat away. I saw in a couple articles recently, people are just spending more and more of their money and leveraging stuff because they're like, there's no chance I'm going to be able to buy a home. You know what? I'm just going to live life. I'm not going to bother saving. I'm just going to live life because everything sort of sucks now, and I'm not seeing much future. So I'm just going to spend, which is probably not the best strategy, but it could be what of a lot of people have that attitude. It could be what's keeping stuff propped up a little longer. Think about that attitude. This is the problem when I'm looking at even nicer. I'm not talking starter homes for really low income wage. I'm talking starter areas that you could, hey, I have a decent job. I can try to get in there. The housing prices are just stupid. You pretty much need two people with fantastic jobs to even get in that neighborhood. And these are starter neighborhoods. No. See, that's where people, I can see, I got a really good job, so does my wife, and we could barely even afford to get in that neighborhood, and we'd be stretched to do it. And that's a starter neighborhood. So forget it. Let's just go on another vacation. Oh, I'm sorry. It's not good from my perspective. VIX, it's still sell vol. Look at these depressed vols. All it's going to take something. I mean, look where we are now. We're back to the lows in December. There is no fear in this market that anything could go wrong. And selling vol down here, oh man. That doesn't mean we have to collapse. But selling vol down here is not a smart decision. To double top on the DAX, still not triggered on the daily. Triggered on the 4-hour, but no follow through on the daily. Look where that 50 is. If you start breaking below this 18,712 level, 18,621, 18,654, 18,5 roughly. But this is getting tired, although it's interesting because we've come all the way down to cycle bottoms on the daily, and it's still holding the rotation zone. The notes, not really just trading against key resistance. If we start breaking down below 108.28, I'm watching for a retest of this channel, though. Maybe there's something hawkish more so in the meeting minutes, but that's going to be key support. Right in this area is going to be key support in the short term. 108.15, rising channel. And that's the prior resistance becoming support area confirmed by this spike low. The yield, trying to get through, but nothing just quite yet. Still was watching for a slightly bigger pullback, but if we take out, especially after the minutes, if we take out this one pausing bar, I got to start watching for retest of some higher yields. Dollar index. There's not much going on. It's not great patterns. Let me jump to the euro real quick. Because the euro, we got the channeling, but it's a channeling double, but it finally did trigger on the last 4-hour bar. It's more so a channeling double. And it's against the rotation zone. But if we start taking out this 4-hour low, I'm going to be watching for the bigger pullback there. Now, the dollar, not much to talk about. Boy, we're going into, sorry I'm so late here. I got on sidetracked with this. Watching now, crude breaking down EIA numbers, but going to be watching for a stronger bottom towards that 76 level. Gold, man, I probably have to start this earlier. Keep an eye on gold's coming in this key support. Gold's coming into this key support, but it needs to show some strength. Otherwise, I'm watching my next target back is back to 2,400. Silver. Silver is so far a sideways channel. There's no double anymore. Sideways channel, but if it starts breaking below about 3150, 3150, we could easily reconnect with the daily rotation zone. And by the way, silver is very overbought on the weekly and very stretched on the weekly. So is copper. Now, copper still has a potential lopsided double, but that could return it to the weekly rotation zone area. It's got to start breaking. First warning sign is below about 488 for me. All right. Spiders, well, I know its market's open. We'll peek at that, but I'm not expecting major momentum off the open. Any rally up would be to the gap, the close yesterday. 530.06. Key support still coming in at about 528.50. The Qs, the gap actually above yesterday's. The next key target is the 458.41 area. Key support coming in right about 453. Tesla, barely a gap down. Again, the only thing I'll be watching for if it does bounce back is a close above 187.20 to retest the end of April high area and possibly put in a stronger topping pattern. NVDA going into earnings at the on the daily, the triple top area, but on the weekly, still officially a double top. But would have to get a lot of technical damage done to take that out. S&P into the open. Uh, 53.41 and then about 53.43 are key resistance points. I'm erring on the side based of a choppier day today. Unless we get something negative tick, but no real breakdown. Decently negative tick. Open below minus 800, but no real breakdown in the S&P yet. So I'll be watching for the tick bounce, and then if the tick rolls over and we can't break really significant resistance, especially 53.44, I'll be watching for at least possibly a short-term top area and be caught in a range-bound market, at least going into the FOMC meeting minutes. Let's see, TJ Maxx. Whew. Now that benefits the lower end. That's major resistance area. Look at that. Huh. Where are they trading in terms of P to E? I'll have to take a look at that after. But the consumer really looks like they're in cost-cutting mode. Be interesting to see where this closes today, because you had a little failed double top earlier, and then it's been on a tear going into earnings. SMCI ran up in tandem with NVIDIA. if it stays correlated, what do you see? So, based off of this, let me take off the SMCI. If it remains correlated, let's see what the reverse. The really key area I'd be watching is this 1030. If NVIDIA were to beat, I'd be watching 1034.73 on SMCI. Remember, I missed that. Sorry, wrong level. 1019. So roughly 1020. 1020 is key. Now, it came down to the 50% retracement from its major run-up. We've had a bounce, and we're back to that 50%. Let me change the color on this so you can see what I'm looking at just with harmonics. So this is a very key resistance area. The only thing that would put me bullish for longer in the short term would be a close above that 1020 area. Then the next targets would be 1090 and then 1160. Other than that, it's already hit this 50%. So if there's any weakness or any guidance that's not so good with NVIDIA, I'd be watching for the rollover play. And if this broke down and starts trading back below this 50% harmonic, I'd really be focused on 600 and then a reconnect over the next few weeks with the 200. Would not be chasing this unless it can get above 1020. Unless you're doing an options play. And then I'd be looking at, the 1020 area strikes and the about the 740 areas if I was going to set up something like a condor or something else. So, that's where we sit right now. Tell me if you want me to just stick with the chart stuff or if you want me to somewhat talk about like other stuff that I did this morning and mix it in with the charts. Let me know what your thoughts are, whether that helps or you just rather have me stick with the charts or I just would like some more feedback because I wasn't planning to do that. It just sometimes happens. Maybe I'm going to take that down to about 53.35. So we've come up to first key resistance is 53.40 with the tick. And the tick's still recovering, but I'm really going to be watching if this stalls out and it can't get above this 53.40. That's going to be the first minor support. Then this 53.43 is major. Keep the mix going. All right. All helpful. Thanks, Jake. Thanks, Sterling. With that, everybody have a fantastic day. I'll see you all back for Unemployment Thursday, and we'll see what NVIDIA does. So I will talk to everyone later. Bye for now.